Hello everyone, welcome to the ichimokocharts.com daily analysis for the S&P 500 for Thursday, May the 5th, 2011. Well, a continuation of the trend to the downside today, and we can see that we have a candle that's made a lower high and a lower low. A fairly large red-bodied candle denoting the sellers making net bearish progress again. And we can see that the sellers have made net bearish progress over the last 4 days, and each day of this downtrend, the amount of progress that they've made has been increasing, marginally larger today than the previous day. But this is exactly the way that a trend should develop. It's a sign of a healthy trend to the downside. Now, the market did find support today down around the 1332 region, and we've highlighted that previously as an area of previous resistance and support, and an area that we thought the market would find some support in. It also coincides with the area of the Kijun-sen, and that Kijun-sen has turned flat. A few days ago it turned flat, and quite often when it turns flat, price action is attracted back towards there, and that's exactly what happens. So we can see today with this largest shadow on the bottom of this candle that the sellers lost commitment as they tested down around the area of previous support and resistance and the Kijun-sen. Previous day's trading, though, around 1344, which was a strong level, we could see that the sellers lost commitment around that level as well. It didn't stop the downtrend from continuing, so that is quite important. We do need to watch that area again. 1332 is also very important for the market for tomorrow's trading as well. Now, if we do continue the trend to the downside, we should look to the 1324, 1325 region highlighted here as an area of potential support, and then certainly down to 1313. The 1320 region was a minor support level previously. We did have a small window open up previously that was closed, so that negates the effect of that window, but we did see a small amount of selling coming in at that level, so some resistance, but it will be a minor level. 1313 is a much more important level. Then certainly down to around 1300, the round number, that will be very important if the market does trade down to around those levels. We also have that area coinciding with the cloud, and the cloud will act as an area of support for this market. Now, in Ichimoku charts terms, we are still trading up above the cloud, so the market has an overall positive bias, and we are just trading above the Kijun-sen, so the market is just bullish in the medium-term time frame. We are bearish in the first-term time frame and in the fast time frame because we're trading below the Tenkan-sen. That's the green line here. And as we noted previously, it was quite some time since we had been trading down below the Tenkan-sen. We can see here we had been trading, we had a bullish breakout above, and now we had the bearish breakout down below the Tenkan-sen yesterday, and the market's gone on with that trade. The important thing coming up here is the interaction with the Kijun-sen. If the market does take that out to the downside, then we could see the market testing 1324 and down to 1313. It has been some time since we've traded down below, and it could be quite a significant change in character in the market. We shouldn't preempt that, however. We could see the 1332 area hold as support. If that does hold, then we should be looking to 1344 as resistance, and then we don't have any decent resistance until we trade up to the 1363 up to 1370 level once again. But this is a healthy looking downtrend, partially supported by the bears, although we did have a slight loss of commitment. They did close the market with control, not terribly strong control, so watch the 1332 level tomorrow.